G'day folks, it's Jim here from Auction Forex. It's Saturday the 30th of October and the markets have finished for the week. It was generally another pretty choppy week. The US dollar saw a decent bounce on Friday, recovering from a partial sell-off on Thursday, and stock markets equally they recovered from their own sell-off after the disappointing results from Amazon and Apple. And they recovered. Both the S&P and the Nasdaq closed almost at all-time highs, so that's encouraging for the start of the coming week. Bond markets were mixed on Friday. The inflation data, there was inflation data came out on Friday. That was pretty much stronger than expected, really, and so short-end bond yields remain high. It looks to me as though the central banks really have got this wrong, and the inflation is going to be higher and stay with us for longer than previously expected. Central banks still seem to be talking it down in the longer term, but we have to wait and see on that one. As we look ahead to the coming week, there's plenty out. The main event, of course, will be the FOMC meeting on Wednesday, and I guess it's pretty much a given now that tapering is going to be announced, the tapering of the US bond purchase program. We've also got central bank meetings at the RBA, who seem to have changed their policy as well. We'll find out more on Tuesday, I guess. And we've also got the Bank of England on Thursday. There's plenty else out beside, not least of which is the non-farm payrolls on Friday, so we'll wait and see on those. But in the meantime, there's plenty going on, so we'll go and have a look at the charts and see what we can make, if anything, out of those. Okay folks, so here we go. We've got a daily chart here of the dollar index, and as you can see, we reversed the red line. The red bar down here is Thursday, the green bar reversing Thursday's sell-off, and closed back at above 94. It was month end on Friday, so there were some flows into the dollar there, and I think the dollar is probably also reacting to the higher inflation data, but it was a pretty solid close to the week, but unfortunately it doesn't really tell us a great deal, and we're still caught within this sideways choppy range that we've been in now for quite some time. The daily indicators are pretty neutral, not telling us a great deal, so I suspect that for the time being we've probably got more of the same ahead of us. If we go out and have a look at the weekly charts, you can see here that we've come to sit right on the this blue line here, the 100-week moving average, and the pink line, the 200-week moving average. So that's at 94.70, and we're currently sitting around this 94.15 level. The weekly indicators are pointing a little bit higher, but whether we actually make any progress, it remains to be seen. I think it's going to be very much a data-driven week. We've got the Fed on Wednesday. That's going to be the main event of the week, as I said earlier. We've also got non-farm payrolls to come, so I would expect it to really, until Wednesday anyway, just chop around either side of 94, and I'm not really looking for much outside of that, to be honest. The non-farms might spring a surprise. I think they're expecting 385,000 jobs to be added this month. We'll have a look at that at the end, but really for the time being, I suspect we're in for a more choppy trade. While I'm here, I'll just show you a quick look at the bond chart, and this is at the short end, the 2-year bond yield. As you can see, I mean, it's come off. It's been at a very low base, but basically down near zero. We've moved up to 0.5%. The markets are definitely reading into the fact that the Fed seem likely to raise rates sooner than they've previously said they will. But I think that what's happening here is this is underpinning the US dollar, I think, for the time being, and probably will continue to do so. If inflation does prove to be transitory, I guess yields will come back lower, in which case further out we might see some dollar weakness. But for the time being, it just seems to me that we're going to maintain these choppy conditions, and that could well be the case over the course of the week, and indeed even into November, December. So we wait and see on that one. But we'll go and have a look at the euro and see what that's got to tell us. Okay, we'll start with a 4-hour chart of the euro, and as you can see, Friday reversed Thursday's move. The euro gained some ground after the ECB meeting on Thursday, but that's promptly been given up, and we're now back above this support down here at 115.20. And the 4-hour charts are looking mildly negative perhaps to start the week. If we look at the dailies, they're not telling us a great deal, and while we sit above this support, I guess we'd probably like to see more choppy trade waiting for a Wednesday to come about. We could go down and test this 115 level. The 50% pivot is at 114.90 by the looks of it. That's of this move here. So that'll provide support. I don't really think we're going too much below there ahead of Wednesday, and then it'll be on what the Fed says, and later in the week what the non-farm payrolls come out as. As I say, the daily chart's not showing us a great deal, maybe slightly positive, but they seem to be losing steam. The weekly probably looks slightly heavy, if anything, but we're sitting as before. Right on this 200-week moving average. The 100-week and the 200-week moving average are pretty much providing a magnet for the euro at the moment, and really I think until Wednesday that's probably going to remain the case. So I wouldn't be looking to do too much. If I was going to trade it, I'd probably look to be buying it below 115 and selling it really a sort of 116 and a quarter, something like that for the time being. But I think there's probably better things to be looking at than the euro right now. One of those possibly is dollar yen. Now, having here we have a 4-hour chart of dollar yen, having moved up to a new multi-year high here last week. We really just chopped around ever since then, either side of 114, and that may be the case early in the week. The 4-hour indicators aren't showing us an awful lot. The dailies, though, do look to me as though we could be forming a bull flag for another leg higher. Having said that, the momentum indicators are not pointing that way at this point in time, so I don't think it's necessary to buy it yet. But the charts, which had become overbought, are now allowing themselves to unwind as we perform this sort of consolidation move here. So I think that's possibly likely to continue, but eventually it wouldn't surprise me to see us to move higher. We'll go and have a look at the weeklies, and as you can see, we've come up against the strong FIBO level here, and currently unable to break above it. But the weekly indicators, they may be getting a little bit toppish, but the MACDs look mildly positive. So if we can break above 114.70 at any time, and I don't think we're doing that early in the week, but there's not really, there's this high back here, that's sort of 115.40. The major trend line comes in here at sort of 117.60. That's a long way off at the moment. Let's narrow that up a bit. And here you can see this is a weekly chart. You can see that this trend line goes way back to well, 1997, 1998. So if we ever do see it up above sort of 117.60 or so, that's going to be serious resistance, and I'm not really sure what's ever going to take the dollar through there. But right now the weekly charts do look mildly positive. Let me blow that back up again. But as you can see, we've got this FIBO level here, and these highs way back here. So 117.60 is still a long way off, but I suspect we may be heading in that direction over time. So we have to wait and see on that one. Okay, sterling, not a great deal to say here. It's all pretty choppy. Once again, as with the euro, it reversed the gains of the previous session, come back to close just below 137, and quite honestly, I think so 136, 138 as a range probably covers it for the time being. 4-hourly charts maybe slightly heavy to the start of Monday. The dailies are really telling us nothing. The 100 and the 200-day moving average, pink and the blue lines, they seem to be capping it, and this pivot that goes way back when, we're not too far away from that. We're kind of bouncing either side of it really. So 136, 138 I think is probably the range at least until Wednesday, and then of course the Bank of England meeting on Thursday. So we have to wait and see on that one. I'm not going to do dollar Swiss, but the Aussie, here we have a daily chart of the Aussie, and that's currently capped by the 200-day moving average. I thought we were going to break above it on Friday, but we were unable to do so. And currently it's sitting a little bit lower, 75.20. I still think we could see further upside movement, but probably not till whatever the RBA have to say on Tuesday.
Of course, it's Melbourne Cup Day as well, so the market's going to be very thin in Australia. But it wouldn't surprise me to see a break above 75.5 and head up towards 76.10 or so, where this trend line sits. On the downside, well, the 100-day moving average is just below 74, 73.85 or so. So that's probably a base for it, I think. And once again, for the time being, just trade the range. Same really applies to the Kiwi. Here we have a daily chart of the Kiwi. The Kiwi is actually sitting well above the 200-day moving average, and it looks as though it may be trying to form a bull flag for another leg up. If that's the case, we're going to find resistance here at this 72.10 level, but above there, the next FIBO resistance comes in at about 0.73. The 200-day moving average is at 70.95, and the 100-day down at just above 70 cents. So I'd be looking to buy dips once again. The daily charts may be coming a little bit overbought, but I think the trend is probably higher anyway. Although, having said that, the weeklies are not really telling us a great deal at all. So possibly just more choppy trade lies ahead, either side of 72 cents. And maybe we buy it at below 71.5 and sell it in that 72.10 to 72.40 area. Not looking for too much in either direction at the moment until we get some direction from the Fed on Wednesday. So that's about it. On the crosses, we'll just have a quick look at some of those. Here we have a daily chart of EurUsd. Now, I spoke about selling EurUsd a couple of weeks ago, and it really has just fallen away and finished near its lows, or on its lows really, at the end of the week. I still think there's probably further downside. The dailies, though, are becoming a little bit oversold. So I'd probably leave room for a bit of a rally, but I think we can probably eventually come back down and look at these lows down here, 152.5. That's 120 points away at this point in time. But if the RBA do have a slightly more hawkish tilt on Tuesday, and we see some Aussie strength, the euro is going to come under pressure, and I think that's the direction of it. The weekly charts are also looking pretty heavy, so that would be my best guess at the moment. Look to sell a rally into 154.5 or so if we see a squeeze, but ultimately looking for a return here to this 152.5, and if we go below there, then the FIBO level's down at 150.75. So I kind of like being long Aussie there, and really the same applies to Aussie yen. I'll just have a look at that. Once again, Aussie yen has seen a decent uptrend. We've paused for breath here, and we may need to do some more of the same because the dailies still remain overbought. But if we do chop around in the 85 to 86 range, eventually I think we could see a break to the top side. The weekly chart do seem to be winding up for something on the top side. Now, if we took out this high here, which is at 86.25, as you can see, there's not an awful lot of resistance really until we get to these highs here. That's up at 89. Now, I'm not quite sure what's going to push the Aussie up there, but if the stock market stays strong, we're going to see ongoing yen weakness, I think, and particularly actually if oil stays strong as well, because the Japanese economy is so reliant on importing oil, so that causes yen weakness. So if the oil market stays strong as well, that may help the cross out, and so I'm looking to buy Aussie yen on dips, and I think eventually we are going to take out this 86.25 level. It might be a bit of a slow move, but I think that's the way of it. So that's something else I'm looking at the moment. It's probably enough on the currencies. We'll have a quick look at the stock markets and commodities. Okay, so here we have a 4-hour chart of the S&P. Now, we had a little bit of a wobble on Thursday after the results came out from Amazon and Apple, but they've been reversed, and the index has closed right on its highs. And at the start of the week, the 4-hour indicators, very short term, they're looking to point a little bit higher, if anything. So maybe we see more of the same. If we go out to the dailies, as you can see, this slow climb high has been pretty relentless, really, for the last, well, really since March 2020. The dailies are still pointing high. They're not showing any signs of topping out at this point in time. And the weeklies, which I've said before, they had become overbought and were turning lower, but even the weeklies now look as though they slightly positive. And it seems to me that we're above 4,600 now, and possibly looking to close in on 4,650, 4,700. Coming back home towards the dailies, I would keep a stop loss on any long positions now below these previous highs here, so 45.50. If we go below those, then I can see us maybe having a bit of a steeper sell-off to 44.50, maybe the 100-day moving average down at just above 4,400. Much will depend on the Fed, of course, this week, and how the market perceives what they've got to say. But it seems to me that tapering is pretty much written into the price now, and the market's used to it, and it seems as though we can continue to slowly grind higher. So that really applies to. I'm not going to go through all the US indices, but the same applies to all of them. I'll have a quick look at the Aussie market. Now the Aussie market had a nasty sell-off on Friday. That was really on the back of higher Australian bond yields, which climbed quite steeply. But we recovered, and we've closed the day just 73 3/4. Probably not a bad finish at the end of the session, really. And the 4-hour charts are pretty neutral. The dailies equally not telling us an awful lot. We closed right on the 100-day moving average, and maybe we just continue to chop around at least until the RBA on Tuesday and take our direction from the US markets. I still prefer to buy dips, but goodness me, Friday was quite a nasty session. Having started the day at sort of 74.5, got all the way down to 72.80 before that bounce. So it was a pretty difficult trading session. But I think it's quite encouraging that we have seen a bounce, and if we can take out this level here, this was 74 3/4 level, then I think we can possibly move on to these highs, 75.60 at some stage later in the week. That remains to be seen, but I still prefer to play it from the long side. Okay, so that's enough on the stocks. Quickly on the commodities. Okay, so here we have a 4-hour chart of oil, and last week I think we were looking. It was probably around current levels last week, but we were looking for a sell-off towards 80 to buy it, and we actually managed to get that. We got down to 80.70 before we saw a decent bounce to sort of 83 and change on Friday. And well, the 4-hour charts are not showing us a great deal, but the dailies are still looking to unwind somewhat. But I think in the longer term, this is probably fairly healthy for the bigger move up. If we come out to the weeklies, you can see that the weekly indicators are generally moving higher. We're currently in the process of taking out this long-term, let me close that up a bit, this long-term 76.4% FIBO level. And I think eventually, as I've said several times before, that slowly over time we're going to see a move up towards $100 a barrel. The real issue is on the supply side, if anything. The demand, I think demand is there, but because of the supply bottlenecks of almost anything you care to mention, that's probably going to help underpin the price, and that's why I also think the Japanese yen is probably going to come under further pressure, because as this goes higher, I think the yen is probably likely to weaken. So once again, looking to buy dips. We're now 83 1/4, so probably you're looking to be long. I think we're probably going to head towards 84 and plus this week. But if we see it back down to sort of 82, 81.50, I'd once again be looking to trade that range, and but always trading it from the long side. Unlike gold, which is having real trouble at 1800, we'll have a quick look at gold. And here we have a 1-hour chart of gold, and as you can see, every time we manage, this is where we're here. This is 1800, and every time we get above here, we get these nasty sell-off, and it happened again on Thursday, Friday, all the way down to 1770, recovered to finish at 1780. But it's a very, very choppy market indeed. And if we move out to the 4-hour charts, you can see the indicators are not telling us an awful lot. We're just really chopping sideways here for the time being. Eventually, as I've said before, I think particularly if inflation is going to remain sticky, hanging around, I think gold will head higher. But goodness me, it's making life difficult for itself, or for us anyway. I keep on buying it at 1800 and having to stop myself out. But the 4-hour chart's not telling us a great deal. The dailies, likewise, pretty much neutral. we've got, if I blow this up, we've got the 100 and the 200-day moving average sitting here just around this 1800 level, and until we can get a clean break higher to take us, well, this 1810, 15 is now quite good resistance, but I'd like to see us take that out and head up towards 1835, which would be the next level to look for. Unfortunately, the daily charts don't really show any sign of doing that at the moment, so I'd probably leave gold alone for the time being. The same applies to silver. Here we have a 4-hour chart of silver, and it's all pretty choppy, and it's finished the week on a fairly heavy note. If anything, the 4-hour charts do point a little bit lower. The dailies not really telling us anything at all, but we're really stuck below this 100-day moving average, which is now at 24 sort of 35 level, and these two highs up here, they're at sort of 24.85, and until we get above those, we're really I think we're probably just stuck in a nasty range. I'd still be looking to buy dips, but once again, I think there's probably better things to trade, as it doesn't really seem to be going anywhere too fast. So that's about it. We'll have a look at the calendar. Okay, so here we have a look at the calendar. We've got daylight saving changing in the UK and Europe this week. So that's something to look out for, because the times will be slightly different. So we start the week off with the PMI. We've got the PMIs, the Chinese manufacturing, non-manufacturing PMIs out on Sunday by the looks of it. But the PMIs are actually spread throughout the week this week. Monday we've got the Australian and the Japanese manufacturing PMIs, and the Kaizen China numbers as well. Otherwise on Monday we've got not an awful lot out through Europe. We've got German retail sales, and then we've got the ISM numbers from the States. They may move things around a little bit late on Monday. Then on Tuesday we've got the BOJ minutes, some inflation numbers out of Australia early, but it'll be the RBA and whatever the governor has to say at the RBA after the RBA meeting. We've got more manufacturing PMIs out through Tuesday, and then early Wednesday we've got New Zealand unemployment. And that's about it. There's not an awful lot else out from Asia or Europe. We've got the ADP numbers on Wednesday. They're expected to be 400,000 by the looks of it. We then got the services numbers, but the real deal comes with the Fed interest rate decision late on Wednesday, early Thursday in Asia. What have we got on Thursday elsewhere? We've got the trade balance. But the main event really will be the Bank of England meeting. That comes mid-morning in Europe. We've got Christine Lagarde. She's going to be speaking a couple of times during the week, and she might provide some action in the euro. And then on Friday we've got the main event will be the non-farm payrolls, at which we're currently expecting 425,000 jobs apparently, with a headline unemployment rate of 4.7%. We won't wait and see on that one. But so it's going to be a pretty busy week throughout. There's plenty of action to be seen, so that hopefully will provide us with some decent trading opportunities. So as I said earlier, out of preference, I prefer to remain long the stock markets and long oil, while currency markets generally look to be pretty range bound for the time being. Although I do like to buy Aussie on the crosses against the euro and also against the yen. So we'll leave it there for now, folks. Have a very good week's trading, and we'll talk to you next week. Cheers.